Joining me at Post 9's Mark Lehmann. He's CEO of JMP Securities. Welcome. It's good to have you back here at the stock exchange. This is an area of big concern these days. You're not concerned?
Well, I'm concerned, but there's also opportunity. And I think we've seen times, certainly this year and in past years, where we forget that tech is the driving force of a lot of the growth of our economy. And there's opportunities to buy great growth stocks at discount prices.
Yeah,
I think we're getting close to one.
What if they get more discounted?
Well, they probably will. I mean, Fridays at the end of the summer are tough times to make big bellwether comments. But it was a worrisome kind of as you know, kind of an almost 1,000-point reversal today. And that's not a great time to go into Labor Day and start thinking about a big upside. But I do think we had a whiff of that earlier in the early part of August and after our June lows. And I think we're going to get to see more of that as we get a better sense of inflation. You
want to give me your view on the importance, and they're holding a big event next week in your backyard out in San Francisco, Apple, of course. It's at 155, just below 156. Some suggest it's the key to the whole market right now, given how fragile things were. Do you have an opinion on that?
I think that's right. I mean, it is the bellwether for our economy. Frankly, it's the bellwether for our market. These events generally are not the kind of crescendo moment where you say, oh, my God, there's a new product, because they're too big to say that. But as they get deeper and deeper into different parts of our economy, and the iPhone itself rules most everything that's in our life, whether it's entertainment or work or more over healthcare over time, Apple is that bellwether. And I think watch what they're doing, right? They're taking some of their production out of China, moving it to India and Vietnam and other economies. They're way ahead of some of the other tech companies. I think it'll be a great event, but I do not expect this to be kind of a bellwether product cycle for them right now.
There are some who suggest that a lot of these mega caps right now are too expensive relative to the market. And they highlight Apple's at 23 times relative to the 18 times that the S&P says, which some, as you know, suggest overpriced in its own right. Do you agree with that idea or not?
It's a relevant concern, but I think the durability of the earnings of Apple are second to none. I think what you look at in Apple, and you look at all of tech, frankly, is you get these pockets of opportunity when we have the volatility that we've seen over the last 9 or 12 months. And I think you're going to get another example that probably, I don't know when that's going to be. Apple's a company you want to own. And if you got a chance to buy it on a down day, when we have these down 3% days, down 4% days, they're likely ahead. I think you absolutely want to add that to your portfolio.
You have found many down days in Meta. Obviously, as I lead you there, it's a stock that you like. Because it's cheaper than it was, or do you like the fundamentals to match? What's the story?
You know, our analyst Andrew Boone at JMP does a great job on this name. It's completely washed out. You talked about Apple at kind of mid-20s earnings. This is 14 times earnings. I think all the bad news is really easy to see. You look at some of the competitors. Snap had an awful last few weeks, and that stock's now single digits. TikTok actually had layoffs, which, you know, their hyper growth, what we have seen in the last few quarters, has slowed down a little bit. It's completely washed out. And the specter of Mark Zuckerberg getting in front of Congress anytime soon is not going to happen. And I think that's a good backdrop for that.
Enterprise software. Snowflake is an interesting name to pick right now. You know, speaking of a stock that's gotten slashed. To say the least.
To say the least. It's wildly expensive by any metric. That being said, I think it's the most well-run big software company, kind of the Microsoft level. It's a $60 billion company. Stock was in the 300s. It traded to 110. Had a stellar quarter last week when they reported. Again, their management team is second to none. They're harnessing a $250 billion market. When stocks get weak, and Snowflake will get weak with a whole market, you want to pick up Snowflake. It reminds me of Workday. Workday at some point was the most overpriced tech stock in the market a decade ago. You wanted to own it. That had been proven out. Snowflake will be the same stock.
Okay. Mirati Therapeutics is the last stock on our list. MRTX. Price target's 110. Your firm rates it a buy. Why do you like it?
The XBI, the biotech index, is way ahead of the NASDAQ. It got whacked way earlier, including last year. It was down about 70%. It roared back 50%. They have news coming up in one of their key development pipelines with Keytruda. We think there's going to be good news there. There's been a slew of M&A in biotech, and I think they're going to be a beneficiary.
Think there'll be more?
I think there's going to be a lot more. You got a lot of dollars that Pfizer and others are going to use, and biotech is definitely undervalued right here.
Appreciate you taking the time to come out and see us in person.